What's happening, everyone, and welcome back to another Sunday Scan. We have a special episode and a special guest on with us today. So we have Ariel, who is a fantastic trader. He has had immense success. He's a very humble guy, but super knowledgeable, and we're very happy to have him on to share some market thoughts and to go over some main watches for the week. So Ariel, thank you so much for joining us on Sunday Scan.
Hey, thank you for having me, and really excited to kind of dive in and get to some of this insane market action we've had this past week. Almost a little too much to recount, but I'm really excited to kind of dig our heels in and see what's what.
Yeah, definitely. So, obviously, like the big news from the past week was we had the election results, and then the markets have just been really responding to that. So, whenever like a really big event happens, you have like a turning point and you have a whole like reshuffle of the market, and you have new trends emerge, new themes emerge, you have new fundamental things that can fall into place. And so there's just so many things moving, so many sectors, so many trends. So if it's okay with you, we'll just run through a couple of those big trends that I've been seeing. I'd like to see your commentary on it, and then we'll get into some main watches later on.
Yeah, absolutely.
Yeah, and then before I get going, I'll just give the disclaimer now that neither of us are financial advisors. These are not buy or sell recommendations in any way. This is for informational and educational purposes only. So, one of the big things we saw was really like the Elon Musk theme, take off. And so that was mainly with Tesla. And then you also had some other things like DXYZ, which is like a fund that holds private shares in SpaceX, and just like anything that was Elon Musk related really just went ballistic with it. And you had some great commentary on why that is. So, what's your take on kind of the Elon trade or the Tesla trade with the election results?
Well, I mean, it's a couple things with the Tesla trade. One, from a technical perspective, it was very nice, right? Has all the criteria, big stage one base, really even in moments where it is in a stage two uptrend, but really completing its weekly pattern. And then obviously a really big breakout that everybody can see. It had a really nice little setup on Tuesday, right around $250. I thought it was really clean myself. If we could pull that chart up, we can pull it up right here. But this thing actually got really clean, where on 11/4, it bounced right off of its ascending 20-day, and then the very next day it took out its prior day highs. For me, that's normally a really good spot to buy. This is just like a normal pullback buy, and it's a good spot to buy. I didn't think you were going to get this large, massive gap up, but obviously, with Elon Musk being, Donald Trump's one of his biggest supporters, one of his most vocal supporters, when you get the ear of the president like that, I kind of joked with you before we started recording that, like, if there's any stock that's going to really, really do well, it's Tesla, when he's basically now got the ear of the president, right? When he kind of put himself in, a kind of joke, if the Democrats had won, his Tesla stock would have gotten absolutely crushed, because he was so vocal for the Republicans that if the Democrats won, his stock could have potentially done the exact opposite of what it's doing now. But it had a really nice technical pattern, and you pair that with, the news that Donald Trump's winning, and you could even kind of see some of the movement, or some of the hints that a big move was coming the night of the election, right? If you looked in after hours, right, it wasn't just Tesla starting to move. It was Tesla, it was DJT, it was even the sympathy PHUN. So it's like stocks that were already moving with the Donald Trump potentially winning trade. Now, obviously, Tesla has this really nice technical pattern, but again, you marry that with some good change in catalyst, which is change in president. I don't know that there could be a bigger change in catalyst, or a new catalyst, and that's it. And obviously, there's you start to add in, people are pricing in the future, which is there's going to be some deregulation. So when Elon says, the government has too many regulations, and I can build a rocket faster than they allow me to shoot it into space, right? Or I can build self-driving cars faster than they allow me to get them on the road and drive them, or whatever have you. There being a little less deregulation means Elon can maneuver a little bit more, means maybe he can make things happen a little bit quicker. And so traders begin to price all these things from the future into the now. Yeah, I mean, obviously you get a huge outsized move with massive volume. And even if you look at the volume, after that earnings where you get that gap up, it's really big volume and then lesser volume on this pullback. I mean, every single day is pretty much volume drying up. And then again, on the ramp back up, it's a big pickup in volume. So that's just clear accumulation. I would expect that probably over the next year, dips on Tesla are going to be bought. And so long as we don't have some, big catastrophe, I could easily see Tesla 400 plus. People are going to start pricing in, robo-taxi and, humanoid robots here pretty soon. So from a technical perspective, boy, this thing is just beautiful. I know I own it and several others own this thing. And it's probably the number one name people want to be in when it's healthy, because it's got incredible daily range and it's pretty much has infinite liquidity. So, and from, again, a weekly or a monthly perspective, I mean, I don't really trade off of monthly charts, but on a weekly perspective, it couldn't have really gotten any tighter, right? I mean, you are basically resting on the 200-day coming into the week. So, look at it now where you're 30% above the 200 days. So that happens quickly, right? It's like first it's fast and then it's
then right before the election results, I mean, you had Tesla report good earnings, and so you had so many different things just come together. And there's actually, it reminds me, like in the ocean, there's something called a rogue wave, and it's like one of these like giant, enormous waves that is very rare, and it happens when a whole bunch of different currents happen at the same time. And you can have the same thing happen in stocks, where if you have, 3, 4, 5 different themes, catalysts, everything come together, you can get these like outsized moves that are just massive, and they can trend for a long, long time. And it's because you have, earnings coming together. You have the deregulation and the approval of different companies, the synergies there, the technical part. Like, you just have so many things. It's one of the number one options names, and you really saw that take effect on Friday, where it's people were just piling into calls, and all along the options chain, implied volatility got lifted, and you have people positioning for December, for next year, for everything. And so you just have all these things come together, and you can have these massive moves. So I really think that, Tesla is the top name to really be watching and paying attention to, and that is kind of leading the charge in this market.
And if you don't own it, I would probably say that any pullbacks to the ascending 20-day, especially the ascending 50-day, like on their very first attempts down to them, they're more than likely buyable, right? You don't necessarily have to buy that red candle, but as it approaches, the 20 or the 50-day, right? That's when you zoom in a little bit. That's when you, from an intraday perspective, I might pull up a 5-minute chart and then, kind of wait for, that lance right side of the V off of that moving average, right? Where you get that kind of a washout into the daily moving average on an intraday chart. It might not look so great, right? It might look like a bunch of 5-minute candles in a row coming down to that area. And then you get, a potential bounce or a wick off that area. And then you'll see it on an intraday level. You'll try to get positioned, maybe use low of day as your stop on a day like that. If you're not already in it, buying it at 320 when it was just 250, mentally can be very difficult. But if it is a renewed powerful uptrend like you think it could be, and like I think it probably is, any pullbacks to the ascending moving averages, or if you somehow got a pullback, 280 would be, seems like a gift from God. You might not get it, but if you just wait for the daily and wait for a pullback on the daily, or just wait for a high type flag, right? Now that it's made this really nice move, if it were to go sideways 3, 5, 6 days, 8 days, even better, right? 2 weeks, it could be even better. But yeah, I mean, it's obvious with the volume, it's obvious with the theme, and the change in president. And Elon was up there campaigning for the man in Pennsylvania, all over Pennsylvania. So he's got Trump's ear. So I don't think that anything negative might be coming for that company, during these next 4 years. And in fact, I think people are waiting for more positivity. I'm pretty excited about the potential of future robo-taxis. I'm pretty excited about, having a little robot running around my house doing my dishes. So it's like, there are some things coming down the pipeline in the future, and that's really all stock trading is, right? You're not pricing in the right now, you're pricing in the what you think could be coming down the road. And that's really what has held so many stocks up when you think about an NVIDIA for the last 18 months, right? What has helped NVIDIA so much? Yes, their earnings and sales, absolutely, they've been crushing it. But it's also that the world is heading to this place where data centers and AI is looks like a big part of our future. So if that's the case, owning the name, the elite name that basically is the picks and shovels name, owning a Tesla where it's the autonomous company, right? Where it's the robot company. It's not just a car company, it's a software company. It's like, and it's a bet on Elon Musk, right? And if there's somebody I've really learned that you don't want to bet against, it's that man. So
yeah, and we were talking earlier how, like, when these themes or these trends emerge, it's so tempting to, like, buy all the names that are lagging, look for the next one. But if you were to look at the AI theme in NVIDIA, NVIDIA, if you had just kind of stuck with that as the theme played out, you probably would have been better off than, jumping from AMD to ARM to all these different things. So
just owning NVIDIA from the outright jumpstart and just not getting, because it's what happens. Like, institutions want to own the leaders so bad. Pullbacks are hard to come by. The pullbacks are shallow. They just continue to kind of go vertical. Like, I remember I wanted to buy VRT so bad in the 30s, but it just wouldn't give a clean pullback. It would just grind higher. It would just in a little channel. And I want a flat base. I want it to pull back, pop back up, pull back again. It'd be some kind of a higher low, and then give me like a flat base personally. But when you don't get that, or even a pullback to a daily moving average and then like a higher low where I can then buy over prior day's high. But even like VRT, like, never gave any kind of a pullback. And that's what happens with the leaders. They just kind of go and they don't pull back, and the pullbacks are very shallow. And you're right. What happens is the leader is gone, and psychologically you're like, there's got to be another one. Right. And you go into AMD and it doesn't quite give the same move. You go into ARM. Now, ARM's made a great move, right? But it doesn't quite give the same. NVIDIA took off in the hundreds, and then it took off again in the 200s, 240, really nice clean base. Then it took off again at 500. And then, right, it's like, and it's had all these clean setups along the way to add. But if you haven't been able to get positioned in the leader, because they are difficult to get positioned in, because it just seems like they're up so much, that you go to the name that's maybe not up so much. And I did it too. I'm guilty of it, right? I kind of had the dual purpose. We talked about it a little bit before we hopped on stream. I bought XPEV. And I bought XPEV twofold. One, I thought China, the stimulus would be a little bit better, and that China was kind of ready to, make a renewed run. Maybe not as crazy as we just recently had, but start to begin this new uptrend. And then two, it was an EV play, right? So I already know that if Tesla's going, right, we've had in the past when Tesla moves, we've had Lucid go from 20s to 60s, right? We've had Rivian when it IPO'd go crazy into the 170s. And then if we go back into 21, if Tesla really gets hot, we've had the workhorses and the Fiskars and the Solos and the KNDIs and they're all crap, right? But they move because the leader is pumping so hard. They end up coming back down to earth, and they end up reversing sometimes even further than where they took off from, like a Lucid, right? Like a Rivian, right? Like Neo, like all of them effectively. But I thought XPEV had a couple of things going for it, and now I am green on the position. But it just goes to show you that had I just even taken the money that I put in XPEV and just plowed it into Tesla, even at a chase, right? Even if I bought the 300 breakout, I'd be up another $22 a share. And percent wise, even better than I would be doing just having my XPEV. So,
yeah. And then
they make it tough.
You've done a fantastic video with Sam that everyone should check out, and that really goes into detail about your trading style and everything. But for people on Sunday Scanned who might not be familiar with it yet, could you give like a very brief, just what do you what do you trade? You're a swing trader. What do you look for? What do you do day to day?
So if the market is coming out of a correction, and this is the key, right? If I'm a swing trader, typically, right? like 3 to however many days, right? Like I own Rocket Lab, I own Cores. I've been in them for over 2 months each. So those are now position trades, right? Like Rocket Lab, I've got a sub 6 average, and the thing's at 13. So, it's one of those names where it worked so well. And it's funny, we talk about Rocket Lab. I bought Rocket Lab almost under the same assumption and preemptiveness as the reason I bought XPEV. I bought Rocket Lab because ASTS was going so crazy, but ASTS was extended. And just like we talked about, I was like, okay, ASTS is going wild. Is there going to be another one? And I thought to myself, Rocket Lab kind of fits that theme, right? And so I bought Rocket Lab, and it literally took off from like mid 5s to 7s for me really quickly. And I was just like, in like 2-3 days, and I was like, wow, this is great. I was like, now I just get to kind of hang out with this thing. And even while ASTS has been coming down, because SpaceX is such a threat, but Rocket Lab literally just makes rockets, and Rocket Lab's just been continuing to go higher. So sometimes you end up in a really strong name, playing that sympathy. But more times than not, I am just a swing trader. I try to nail stocks like I buy a full position on a breakout day or a pullback buy, and then I try to catch a 3-day move. I trim off about half my position into that 3 to 5 day push, depending on how strong the market is. And again, depending on the conviction within that trade. But I'll trim off a piece, and then I'll just continue to allow an ascending daily moving average to keep me in that position. Once the chart works for several days or weeks, like a toast, for instance, which I've now been in for a while from 25, now the 200-day has caught up to my average. Well, I love Toast. I love their business. I think they're growing. They're great. I've got just the sweet amount of shares that I'm not really worried about an ugly pullback. And now the 200-day moving average is my stop, right? So it could take 6 more months for it to finally close below the 200-day moving average. It could take 18 more months for it to close below the 200-day moving average. I have no idea, but I'll just allow a moving average to work. And then that might be the only difference between when I want to be a position trader to when I want to be a swing trader. And I'll say this, that the best position trades are born out of corrections, not big extensions in the market like this. The market's now effectively been going higher with not much give back since last year, October. Right. I remember we had the 3 waves down, and then we had the follow through day at the end of October, and there's been very little downtime in 2024. It's been a pretty incredible year, right? Other than when the semis kind of peaked in March with SMCI and NVIDIA, it's been pretty incredible. But those kind of pullbacks that you look for, 10% corrections, are when you start to really monitor stocks that are showing relative strength. And once you find those stocks that are showing super relative strength, and I could just name a few, ANET, DEC, those two showed awesome relative strength right at the end of the correction last year in October. And if you look at those stocks, they're basically both at new 52-week highs this week. So those are the kind of scenarios you want to end up in. And that's when it's best to position trade, is after the market's coming out of a correction and gives you a follow through day. Almost every other time in the market, I am a swing trader. But if a stock allows me to, right, I still will peel some into that strength. Like I did peel some off on Tesla, a little bit lower than where we're at right now, but it's like we're getting a little bit extended on a 3-day basis. But I still have big conviction in what a bigger picture can do. So the remaining of my shares, so long as they don't get stopped out on a daily, I will position trade them. So don't close below a 20-day, and then 3 more weeks from now, don't close below a 50-day. And I'll be using the 50-day for multiple months. So if it allows me to. So it's kind of a hybrid. I will try to position trade, but I am trying to swing trade and rotate some of that capital from setups that are tight into 3, 4, 5-day momentum bursts, peel some off, rinse and repeat, and try your best to compound on that. But then also keep a piece, because even if you held a half of a piece of, call it AppLovin from 90, right? And you sold some at 140, right? And you sold half because you're like 90 to 140 in a month. Like, this is crazy, right? But then it goes from 140 to 300. That other half is doing better for you than your first half, right? And so that's why you want to keep a little piece, even if it's a third, right? Who cares what you hold on to? You never know how crazy that a third could go. And it's a good reminder, because I had NVIDIA at 160 something bucks, and I was like, even if I had a third left of what I had, I'd be killing it. So yeah, just a hybrid. I really try to avoid day trading unless there's like a really insane opportunity. And to be honest with you, I think that the most insane opportunities for an intraday kind of thing are just reversals, extended reversals on the short side. I don't think that there's because you don't know how high something can go on a breakout on day one. But once something has gone really crazy for multiple days, then if I'm going to day trade, it'll be the first red day or something. But if I'm going to swing or position, it's going to be just a generic breakout in sectors that are tight, and that could be coming out of clean bases, and which we'll get into more of these as we get on.
Yeah, definitely. And something that we were talking about earlier before we got going was that, in a market where so many things are going crazy, so many things are already, somewhat overextended, like we were talking about PLTR, Palantir, how it's had, that was a big move, but it was a big move that took a while to happen. It was pushing up against, its resistance and everything. And then it finally broke out and it hasn't looked back. So like you were saying, a lot of times with names like that, even if they continue higher, it's not until the actual market comes in a little bit that it gives you an opportunity to either, enter on the long side if you can have a tight range and a tight stop underneath it. Otherwise, if it just keeps getting more and more overextended, then the magnitude becomes on that mean reversion trade once it eventually corrects back in. And I know that, you go both long and short. So, for some of these names that you're looking to potentially short once they get overextended, did you trade DJT at all, or what kind of names?
No, I didn't. I did. That's the one that I avoided. I actually traded Fun. I thought it was even easier. And I've always said this, that the sympathy play dies more and faster than the lead runner. And I remember this clear as day. I actually had a 12-month hold on a short on VRM. So when Carvana was going from the teens up to 60, right? VRM was going from $1 to twos or something like that. And I remember I had a big short, $2.50 basically. And then they ended up doing an 80 for one, it was like an 80 for one reverse split. And I had $100 and some odd dollar average on it. And now we're back at 10. I held it for 13 months. And it was a short, and it was a 95% gain on the short side. So it's about as good as you can do. But yeah, I will always go, if I really want to short something, it has to be crazy extended. And obviously DJT, I thought DJT fit the bill after the election results were in, and then it becomes a news failure, right? And obviously, if anybody's familiar with Stephen Ducks, he absolutely murdered it. That is how you trade DJT. For anybody that wants to see, he's the man when he did that. But for me, trading the sympathy sometimes can be just as easy. It's the first one to die. It's the one that dies even more. It stays even heavier. It doesn't have those V-shaped recoveries as well as DJT will have. So those are a little bit easier. But when things get really extended from their 50-day, and I think that they're going to give a first red day, like an SMCI or potentially like Palantir, or I'm looking at App. Those are good. Those are just mean reversions, just 1 day, first red day. Maybe you hold a little overnight and you catch that day 2 washout, and then sometimes they'll have a wick back up after the morning wash. But those are fine. If I really want to short, I actually think that the best kind of shorts to swing, which can be done as well, is you're in this really powerful market, which we are in. And when you're scanning, you're sitting there saying to yourself, what stocks are still below key moving averages? What groups in particular aren't getting any love? Because if the market begins to pull in, right, those stocks that were already getting no love will just get no love even more and will roll over even more. So that's kind of my thinking. And then the stocks that are in a powerful uptrend, when the market pulls in, let's just say it goes on a 7% correction over the next 6 weeks or something like that, a 10% correction, right? The names that have made the strongest moves, your Palantirs, your Apps, your whatever, those are the names that could potentially be finding support on rising moving averages. But the names that are showing relative weakness right now, let's say the market pulls in 10%, those names are going to collapse 30% or more, and you're not going to have really much headache just swinging those on the short side. So it can be done 2 ways. You either are shorting first red days on huge extensions, and then you'll get some failed follow through in the morning. It'll break, it'll go and retest a pre-market high, or it'll have its opening print and it'll just zoom right past that and then fail its opening print, and then maybe break prior day high, and that's another spot. And then maybe it'll go green to red, and that's another spot. Break prior day low, that's another spot. Several ad spots along the way. Or you can scan and you could say, while the market is really strong, and the inverse is true, right? When the market is super, super, super weak, what are the sectors and what are the stocks holding up really, really well? Because when the market turns around and gives you a follow through day and begins to turn back up, those stocks that were holding up really well are the stocks that are going to make the biggest move. And again, just the inverse of that. When the market is super strong, which is where we're at right now, what are the sectors that are super weak? Because when the market pulls in and gives you a distribution day, like let's just say Monday is an ugly red day, but an ugly red day still in an uptrend. Well, if there are stocks that are like in these stage 4 bases, they can continue to break down. Good example quickly would be like a Qualcomm, right? Qualcomm had like good earnings, but then all of a sudden, you get this already nasty move down. And while the market has been very strong, right, Qualcomm effectively looks like it's building a bear flag, right? So now what happens if the market pulls back 10%, right? Qualcomm probably slips even more. I mean, it just had a gap up for earnings, completely failed the move, went even lower on Friday, right? So now, hypothetical, the market then has this 10% correction from here till January, right, over the next 2 months or 12%, something that hurts, but not something that would be considered a bear market, but just to pull back in an uptrend. And now all of a sudden, I could see Qualcomm getting hit even more. It breaks this little bear flag, and what's to stop it from coming back down to, 130s? And then that becomes my thinking. So, and then you say to yourself, well, what group is Qualcomm in? Well, Qualcomm's in the semi sector. And then, is there more evidence that semis haven't been strong? Well, outside of NVIDIA, there's plenty of evidence that semis haven't been strong. ACLS, RMBS, LSCC, right? Like the list goes on, and even AMD, right? AMD used to be 225. It came all the way back down to 140. Does that scream strength to you? And it's done that basically in the last year. So it's like, or since this year, 8 months, call it 6 months. It's like AMD's just effectively been in a downtrend. With the exception of AVGO and NVIDIA, the group is weak. And maybe a handful of other names. Now, that doesn't have to remain true, right? The sector can totally turn up. But again, if the market were to begin to show me distribution, groups that were already weak will just continue to be weak, right? And then if NVIDIA were to say, I don't know, come back down to 110, right? By the way, the thing is still up. It's effectively like it being at 1,000. So it's like it's going from 150, it's still at 1,000. Still holding up really well. But if NVIDIA were to come back, I don't know, 10, 20%, right, the rest of the semi sector is in big trouble because the names that have already been showing weakness could just very well continue lower. And you look at patterns like this, it looks similar to what Sedge did or to what EMPH did. They've got these tops, they pull back, they build a bear flag, they break down some more. And the evidence is there that there are more stocks in the group that aren't acting well. I'm not saying that it has to break down. I'm just saying if you wanted to swing trade to the short side, the opportunities exist just like they do to the long side, but your thinking has to be different, right? When the market is super strong like it is right now, what are things showing relative weakness, right? AAOI, that's relative strength, right? It was already strong for a while. Then it has a huge move on earnings, right? Qualcomm, that's the exact opposite. That's the exact opposite. And the market is strong. So the underlying conditions for which these stocks trade in is the exact same, right? The market is healthy, right? That's undisputable. So the market is healthy. One stock does this, the other stock does that. And, that needs to, and then you say, well, what sectors are these in? Okay. Qualcomm's a semi, and I don't know right off the top of my head what AAOI is in. I'm sure I can find out in about 2 seconds.
And another example of that total relative weakness, especially in this market, is something like mRNA, where you could have.
Moderna, terrible, dude. And and the thing is even before that popped to 170, it's been relatively weak. It's been, and by the way, if the market were to dump, say, another 10%, like we talked about, right? Moderna's 20, right? If the market pulls back 20%, 10% here, right? Moderna's in the 20s. It's just is what it is, right? It hasn't been able to go up this entire time. And then while the market's been strong. And so when the market starts to give way, right, everything gets thrown out, right? Like if they're going to throw out NVIDIA, they're going to throw out Moderna even more. Like more than they already are. And that's why I don't try to catch these bottoms. And I just use that thinking of, when the market's really, really strong, what are the names showing tons of weakness? And when the market's really weak, what are the names being really strong? And I gave a great example, I believe, when I was speaking with Sam, and it was the cybersecurity names. If you looked at when the market was giving that 3-month correction, like the perfect 3 waves down 10%, it's just beautiful. You had cybersecurity literally going sideways through the exact same period where the market's down 10%, CrowdStrike's up, a couple of percent. That should get your attention, right? It gets your attention. And then because it's not going down when the market's going down, the only reason that would be happening is accumulation, right? People with really big money, institutions, are buying these names when the market's going down. They're using that market weakness to buy something they believe is at a discount. Then once the market gives you a follow-through day, right, your cybersecurity names are gone, right? You look at CrowdStrike, PanW, Zscaler, and by the way, they're all strong again, right? CrowdStrike had this ugly move down. PanW had this ugly gap down. PanW's out at new all-time highs, right? CrowdStrike's working its way back up there. FTNT is working it is at a new high. So it's like these groups, they all kind of move together. God, FTNT, what a monster. And it's the same thing, even like a PanW gaps down and comes right back. So oftentimes it's like, they fit a theme, and then even again, a pullback, an ugly pullback, but to the ascending 200-day, which has been just in a steady uptrend for a really long time, pulls back right to the 200-day, and then doesn't break it, and then just takes off, breaks it for just a moment, but still a higher low, and then just continues to grind higher and grind higher and grind higher. And that's what leading stocks do. They just do the exact same thing over and over. And oftentimes it's not just one name within the group acting well, it's multiple. And it's been the reason why, even though I own NVIDIA, I've been a little weary about it, because it's like the only name in the group acting well. Yes, AVGO is another, but like, if SMCI is really NVIDIA's third largest customer, NVIDIA hasn't blinked, and then the entire semi sector has been kind of weak. I've just been like 1 foot in, 1 foot out the door with NVIDIA. I'm like, it's still grinding. It's still above my key moving averages. It's still above the 50-day. But damn, the group around it doesn't look so good. And so when I'm scanning, I'm like using that, the things that I'm seeing as like evidence as to whether or not these groups are being accumulated or not. And oftentimes you'll see it within really strong and really weak periods for the market. When the market's really strong, what's weak? When the market's really weak, what's strong? And then that kind of gives you your clues as to where to be. And even like, we talked about it earlier, like MSTR was moving before Bitcoin, right? MSTR, that's what made it so hard to own, right? It's like it's moving before its underlying assets moving. But then as soon as that underlying asset started moving, it wasn't just MSTR anymore. It was, Wolf's back at it. Cypher was going, Hut's been moving, Coin's going, MSTR's making an outsized gain now. So now there's more evidence that it's not just one name, it's the underlying asset plus a dozen other names in the market. And that's what you want to see. I mean, even recently, like Hive hit my radar on Thursday or Friday. And it's like, you've got all these, even the, BT and BitF. And I'm just like, these are all hitting my scans. And so it's the evidence is there that it's not just one name. And obviously now that Bitcoin begins to act well, and that's how I would look at it is, are there names within the group acting well before the underlying, right? And like cybersecurity, is there a group out there acting well before the underlying market? And there was, right? It was cybersecurity. Is there some stocks that are acting well before the underlying market? Right, MSTR was one of those, and then it ends up being one of the most recent leaders, where people and institutions look at it like, I gotta own MSTR. It's a freaking leader, and it's making this huge outperformance like everything else in the S&P. But it was already showing those clues when its market was weak. Right, I wouldn't be looking at like the SPY or the Qs when I'm looking at MSTR. I'd be looking at Bitcoin. Right, just like I wouldn't be looking at like the Qs when I'm looking at ExxonMobil. I'd be looking at like the XLE or the price of crude oil, right? Yeah. And so that actually maybe is a pretty good segue to start talking about a few of the names on watch list now that we're talking a little bit about oil.
Yeah, 100%. So I know that you had XOM on watch. So yeah, let's get into some of the names that, really have your attention. Part of this was to really just catch people up on all the themes that are moving. And a lot of times some of the best moves happen when you stick with the themes that are in play and everything. But there's also other themes that are newly emerging. And, like you gave the example of instead of skating to where the puck is, skating to where the puck is going to be, and certain sectors, certain themes could be shaping up that way. So yeah, I'm excited to hear about some of your main watches for the week.
Yeah, so obviously we talked a little bit about Donald Trump and the effect that he might have. Well, one of the things that we heard him talk a lot about is about us, like upping our productivity with oil and gas and refining and fracking and drilling and what have you. So, when I'm looking at the price of crude oil hasn't really been going up, right? And if you're going to tell me, hey, we're going to introduce a bunch more supply into the market, well, then I would tell you that maybe the price of crude oil doesn't have to go up, right? Because the demand maybe upticks every single year a little bit, but if we're going to increase supply, and particularly in our own country, that could bring our own prices down, which might affect some of these companies' bottom line. But then I start looking at, some of these bases, and I start to say to myself, like, ExxonMobil is holding up this well when crude oil is effectively from 2022 highs down about, a little less than 50%, right? It's like down from like 127 or 130, and we're down at 70. So call it's down 40%. In the meantime, ExxonMobil is higher or is at the highs of where it was when the peak in oil was put in. So I start to say to myself, hey, we maybe have a president in there who's loving of some of these energy companies, who talks about how energy independence, and even other countries are sitting there saying, well, one of the ways that we can maybe stop Trump from hitting us with tariffs is if we buy more natural gas from them. So then as soon as I saw that headline, and I already told myself, because this chart came on my radar a few weeks ago, it's like EQT. And, you look at the weekly on EQT and you go, holy scranoles, that is really freaking nice, right? You go, this chart is gorgeous. Now, I'm not sitting here saying, it has to go, but I'm saying that this chart's beautiful. It's nice and tight. And when I look at something that's nice and tight versus something that's already super extended, like, a VST or CEG, and now they've obviously been pulling back a little bit more recently, but they got so overextended that, like, buying them again, it's like the equivalent of jumping out the 10th story window. You're probably not going to survive. But if you buy something that's coming out of a really tight consolidation, if you're wrong, you might just break a leg, right? And so that's the difference. If I'm gonna trade and I'm gonna jump out of windows, which is essentially what putting a trade is like, I want to jump out of the lowest window so I don't get hurt if I'm wrong, right? Because you're wrong so often as a swing trader. But when you're right, things got the potential to move for weeks, months, even years. So yeah, instead of just, coming on here and being like, oh, well, we're just going to focus on the sexiest names. NVIDIA looks good. Palantir looks good. Meta looks good. A lot of them, or Reddit is a good one. If it pulls back into ascending moving averages, nice IPO, young base, big volume. If it pulls back into ascending moving averages, it's probably buyable. But there are a bunch of other names out there. Like we spoke about App. It just starts to get too extended, where then when I start to look at some of these weekly charts on the energy names, where I go XOM, EQT, this RRC, this HES, this EOG, I mean, these things are absolutely massive weeklies, and they're gorgeous, right? And just like we mentioned before, they're already looking really good without the underlying doing anything. So long as crude begins to just not go further down, right? These look good to potentially go higher. Now, they might not, right? But they're very tight. It's where new themes can emerge, is usually out of things that are really tight and super big bases. I mean, a big base like this that's lasted over 2 years could give you a 12-month move, right? Could literally give you a 6-month move, so pretty easily. I mean, yeah, these are 2+. These are like a base since April of 2022. So over 2 years, right? Of just perfect sideways, while its underlying asset class, has gone down. That's like saying, That's like saying that while Bitcoin went from 65,000 or 69,000 all the way back down to 15, Riot just hung out, or Mara hung out at 50. Right? Imagine what you'd be thinking to yourself if Mara was like still hanging out at 55 or 60, at the beginning of this year. Right? All of a sudden, as Bitcoin starts to go to 25 and 30 and 35,000, Mara would probably be back over 80 and 90, right? And that's my thinking with some of these energy names. If oil begins to get back into the mid 80s, 90s, 100 ever, right? Some of these names will really, at that point, be going and going in quite a meaningful way coming out of these big, long bases. So that's kind of been my thinking recently. And part of it is it's a whole new group. Right. It's not like I'm like, oh, we spoke a little bit about these nuclear names, right? The Oklos has been another theme. And then the uranium names, right? CCJ, UEC, et cetera. And these all have an exact same look, right? They tried to fail. They double bottom. They literally tennis balled right back up into new highs. And then they're bull flagging, right? CCJ is doing the exact same thing. Right? It's literally, they're the exact same chart. Why are they the exact same chart? Well, that's because the exact same capital flows are going into them. The exact same institutions are the ones, turning on their buy program or telling their traders at their desk to accumulate UEC and CCJ because they're two of the more liquid, names within that space. Fine. And that's exactly why they look the same. So yeah, there are plenty of themes out there. I think the big one is we just have to focus on things that are tight. Obviously, there are names that still look really good. Meta was one of those names that I still think on the tech side looked really, really good. Bounced right off the 50, popped right back up. If it just gives me like one more little day or one more little pullback, and then I can buy over prior day high. So like, one more little day to tap the 10 or the 20, and then on Tuesday, buy over that Monday's high where it tapped the 10 and the 20. That could be a very viable entry, or you could just wait for a flat base breakout at 600. I think that's pretty doable too. But again, right? Meta is up from 100 to 600. I'm not sitting here predicting that it can't go higher. But all along the way up to the 600, it has given multiple nice entries where, and it's been talked about plenty, where these energy names haven't been talked about at all. And so I think that sometimes, trying to figure out where that money can rotate into next is very important. And when you see big, giant bases like that, if they don't catch your attention, then you're just really not paying attention, because that is where the biggest moves come from. And I know it may sound silly. I mean, I don't trade based on Warren Buffett recommendations, but when you see him kind of deleveraging himself within that tech sector, and even a Stan Druckenmiller, selling off the last of his NVIDIA, or also deleveraging a little within that tech sector, and then you see Warren buying, more oil, again, I'm here to make money, and I do want to be in things going up. I don't want to be in a chart that's going to continue to go sideways for 2 more years, right? So I need to see some evidence that they're starting to break out. And I would love to see some evidence that maybe the underlying asset is done going down. It doesn't have to go up, clearly. It just has to not be going down. And ExxonMobil's been able to hang out that well within an environment where its underlying asset has gotten sliced by 50%. So effectively, for every barrel of oil they're selling it for 50% less than they were just a year and a half ago, 2 years ago. And so their even their earnings and sales should be reflective of that, but their price of their stock isn't reflective of that. Could it be because of their buybacks? Could it be because whatever reason? Fine, but they're holding up really great. And if the underlying asset begins to move, then I really want to focus on it. And it's not just one name having built me a great base. It's multiple, right? It's the EOG, it's the RRC, it's the EQT, it's the XOM, even Chevron starting to pop up. So I think that is a potential great theme going forward, just based on their technicals. And again, just based on the idea that they're looking great when the underlying hasn't done anything. If the underlying begins to do anything, right, in a positive manner. And by the way, positive meaning price of oil is going up, which maybe means we have to pay a little bit more for oil and gas. Maybe that's not positive for us, but if you're long energy stocks, right, then you should be making more than enough to compensate for the extra fuel costs. So that's kind of my thinking, is like, where do we go next? And energy looks great. And then, with that too, we've got the IWM's been ripping, and we looked at, before we went live, we looked at these new younger IPO bases, right? We talked about Zillow, we talked about Toast, we talked about I forget the few others that we looked at. Affirm, and Affirm kind of has that Carvana app look to it, right? Where it just creates this, you look at Carvana last year and just this big weekly base down here, just perfect, but you couldn't have missed it. I mean, you couldn't have missed it if you were paying attention. And then if you look at Affirm, it's like, you just can't miss it. It's like we're just a little higher here on the spectrum, but you just can't miss it. So it's like over 50, right? Does it turn into Carvana 2.0? Nobody knows. Is anybody patient enough to hold it for Carvana 2.0 for a firm to get back to 150? Probably not, right? Like a lot of people just aren't that patient, but the setup is there. So, and it's not just in oil. The market has been so powerful. It feels like there are setups everywhere. Which goes to a great tweet that I made the other day. When things are flying off left and right the way they are right now, the thing I like to do most is say to myself, do they have really good earnings and sales, right? And if it's a yes, and it's had a good reaction to its earnings and sales, I in particularly want to focus on that, right? And it's how we mentioned Tesla. Right? Tesla had a great reaction to its earnings and sales. It chopped around some and even pulled back into the ascending moving averages while the whole election thing was going on, but it found support on rising moving averages coming off of a really good earnings report. So that's like, it had a few factors going for it into that move. So there's just so much to keep up with right now. But if you really want to swing in position trade, I in particular position trade, where things last a little longer than 3 to 5 days, you have to ask yourself what's coming out of a really big base. For instance, Tesla is one of those names coming out of a really big base, right? It just made a 2-year high and it was coming out of a nice bottoming base. So I want to hold on to names like that for a really long time. And I want to know that there's just tons of liquidity right now. The market's fantastic. But if markets begin to rotate money somewhere, where would it be? It's probably, and it could very well be, into these energy names that have built these very well big defined weekly bases. So that is where I'm putting some attention. But yeah, we've got other names. So like we mentioned, we got Meta. AI looks very nice for speculation. And then obviously biotech's been very strong recently. Here's a cup with a handle. So you have just this Biohaven biotech had this really nice uptrend. Big volume back last year in September, pulled back, looked nasty for a minute. Again, did the whole tennis ball action where it just rips right back through the 200-day and then just consolidates basically and builds this little cup with a handle. If it can get going over $55, maybe on some sort of catalyst, maybe on earnings, because now we're actually starting to get to earnings on this name, Biohaven, if I'm not mistaken. Earnings are on 11/11. So 2 days from now, I believe that makes it Monday. So if earnings are good on Monday, right, this Biohaven could very well be viable for a move into highs. So there's just so much going on right now. It's a bit overwhelming. But yeah, that's kind of where my thoughts, that's kind of where my watches are this upcoming week. Some energy, a biotech, a little bit of nuclear, a little bit of mega cap, a little bit of speculation with the AI in AI. And again, AI, I don't love the name. I don't think they've got the best earnings, but this thing makes a move up and just consolidates. And now we're getting pretty dang tight. And even this most recent pullback, you pull back, you find support on the now curling and flattening 50, and you get right back through the 200 and you go and push out and make a new high. So I see these little upper wicks. So probably over 28.5 looks pretty decent. A little bit more tightening maybe on the right side. And ideally, you're buying some of these names as the market's, acting well. If I'm buying, AI, I'd like to maybe see, the AI theme still doing well. I would have expected AI to maybe be doing a little bit better as IONQ's running, because they kind of ran at a similar time last year. Some names, again, just are laggards, right? It's like you see IONQ and maybe part of my brain goes, what else could be next? And then I go, oh, AI looks pretty good. Or maybe it's not that good at all. And we won't know until it gets moving or not. So, but just a few names that we have on watch there.
That was fantastic. So thank you so much for going through those. I have a lot of the same thoughts that you do, and I think that it's just so nice to be able to talk about so many sectors moving, so much of the background, and like the names that we have on watch, they change, they rotate, but just getting that market context can help people build their own watch lists and everything. So that was great. I will pull up my chart and I'll get into a couple of my watches for the week, but I'm going to keep it very short. That way we don't. We want people to be able to focus in on what makes sense for them. So I'm just going to go over a couple. And the first name I really have on watch into next week. And again, my style is a little bit more like options trading usually. So I'm looking at things that can have a big move over the next couple of days or over the next few weeks. And then I try to either capitalize on that with calls or sometimes puts if it's up to a mean reversion trade. But with CRM, they had somewhat of a catalyst on Friday. They're coming up to this big area. And, in markets like this, especially like bullish markets, and I know it's been a little while since some of the people are familiar with like the 2020, 2021 style market. When you have things that are coming up to like new all-time highs, they have catalysts. Those are the names that tend to really have a strong reaction. So I have CRM on watch for calls for myself for the upcoming week. The next name that I have is Tesla. Like we said at the beginning, this is really the top of the list for everything. You have so many factors coming together. You have earnings, you have the election news, you have approval stuff, you have the technicals, a big base, a bullish environment. And, one of the overlooked things with some of the Elon trades with Elon companies is that, a lot of times they get bashed for their valuations, but you have to take into consideration that Elon has the ability to take one of his other companies and basically IPO it. So you could have Tesla buy 10 or 20% of SpaceX, and he could in the next year or two basically take SpaceX public at maybe $150-200 billion valuation, and Tesla can make 15-20 billion just like that. And it's the same way that if they were to make 15 or 20 billion in net earnings. And so you have that kind of like hidden catalyst in the back. So just because the valuation on Tesla is high, Elon has the ability to basically compress that valuation with things like that no other CEO can really do in the same way. So there is a premium built into these names, but it's for a reason. And so Tesla is just the ultimate name on watch, especially with the options activity. And we saw that a bit on Friday, where you just have the entire options chain, the implied volatility goes up. People are positioning multi-million-dollar positions for all types of strikes out. And that's really like part of the run. When we had that in 2020, 2021, it was a very similar kind of thing. You can see the volume increasing, you can see the technicals going. And I think that we're going to start seeing the volume increasing and the technicals doing a very similar move with that. So Tesla is a main watch on me for calls. But that being said, just like with NVIDIA, just like with SMCI, back when they had their initial run, with the strongest stocks, they go through periods where they're going basically parabolic, they're getting nonstop bought, and then you have periods of consolidation. So that mean reversion doesn't necessarily mean that it's going to slam all the way back down, but they can have 5-10% corrections, once a month or every couple of weeks or something. So be prepared for those. And once it gets super overextended, it will flip to a more of a mean reversion bias. But I always try to keep in mind where's the magnitude of the move, and I don't want to focus on shorting, a 10 points down or something like that when the next 200 points are going to be to the upside most likely. And then just a couple other names real quick. MSTR, Bitcoin's ripping new highs. And you can see that this is an example of, when you have a name in a bullish environment with catalysts, with some kind of, anchored speculation, as we call it, like the Bitcoin price and something else, you can just have these massive moves out of these bases. So that's another one. Coin, the exact same thing. Yeah, and look at coins coming up to a base that's very similar to that. So I could see that reaching the highs. And those are basically the names. The last one I will mention, and this is always an interesting one to bring up, is ASTS. And we talked about it, with these themes, with the SpaceX being able to get any approval that it wants. ASTS is going to, I think, be detrimentally hurt from that. I know people say that they're in different spaces and everything, but I think that it's just going to basically have a round trip. And, it kind of reminds me, you have certain stocks that get very large followings, and it had a huge move up, and it had some good reasons for it, and it had some good fundamentals. But when you have a very retail heavy crowded stock, and one of the main reasons for it to go up, with like its market share and everything like that, when that kind of goes away, then you can have these big round trips and you can have a very AMC like move. So I think we're gonna have some more downside in ASTS, and so we'll see. But those are all the names that I had on watch for this upcoming week. And Ariel, I just can't thank you enough again for coming on. It's been a joy to be able to catch up and talk with you and everything. And so, I wish you all the
Thank you
best
so
luck
much for having me, brother. I appreciate you a ton. And sorry if I chit-chatted too much. It was great talking with you before we went live here. So
Absolutely.
it was great to finally chat with you and meet you. So hopefully we get to do it again. And we'll keep some good Sunday watch lists put together.
For sure. All right. Thanks, brother. All right.
Thank you, man. I appreciate you. Have a good one.
Thank you for watching Sunday Scan. Be sure to check out other content put out by Investors Underground, including interviews, podcasts, educational material, and more. Thank you.